The next government plan is CPP, or as they say, Canada Pension Plan. Okay, a lot of people, of course, think of Canada Pension Plan as simply for retirement purposes. The reality is actually living benefit here as well in terms of the disability benefit. Right? So the definition, however, of disability under CPP is quite restrictive. Okay, so it's not again ONOC, NEOC, and all that kind of stuff. There, the definition is very strict. Okay, that your particular disability has to be of such a severe nature and it's going to last for a long time. So it's severe and prolonged. So this is not a situation where you broke your arm or something and so now you're on disability insurance for a couple of months or whatever the case may be. Oh, you broke a leg, whatever. This is a situation really what the possibility that you are going to get back to normal work and everything are very remote. Okay, so you really are looking at a very long period of time that you're going to be covered for. Okay, so the waiting period is 4 months. So you can see, once again, this is not a simple thing that say, okay, I broke an arm, I'm going to go, I'm going to put my claim in or something. You know, it has a waiting period of 4 months, and you also have a benefit period of age 65. So once again, these are fixed. So you can't say, well, can I get 3 months on waiting period, or can I get a 2-year or 5-year benefit? No, it's fixed. So everybody in Canada who contributes to Canada Pension Plan, okay, will get this particular, and they're all covered for the same amount and everything, same period, same everything. So the contributions, if you are an employee, okay, then the contributions will be a 50-50 split. So whatever your employer is paying for you, you're paying the exact same amount, okay? So employer-employee, they basically split 50-50. So for example, I believe this year it's in the neighborhood of roughly about $5,000 maximum for between employer and employee. So you would pay $2,500 and your employer would also pay $2,500. So it's split 50-50. If you are self-employed, of course, you pay 100%. So the entire amount will be paid by you as a self-employed person. Okay. Now the contributions themselves, of course, from an employer's perspective, are deductible. Okay, and from the employee's perspective, they're also deductible. Although we don't use the word deductible, use that we actually get a credit. Okay, but essentially the same idea is that in both cases there is some tax implications. So that means then that at the end of the day, the benefit will be taxable. Okay, so whatever you receive, whether it's $500 a month or whether it's $1,000 a month, I believe this year the maximum something in the neighborhood of about $1,100 and change. That will be your maximum. That will be fully taxable as well. So because the premiums that are being paid are in fact deductible or credits if you're an employee. Okay. There is no spousal benefit in the disability component. Remember that there's other pieces to CPP. But the disability component, you become disabled, the spouse gets nothing out of this at all. But there is children's benefit. So if you have dependent children, in other words, younger than 18, they will get some kind of a payment. Again, I believe this year it's around $255 or something. Not important for you to remember that. But basically there is a benefit if it's a dependent. If that child's between 18 and 25 and full-time at school, not part-time, but full-time at school, they will also receive a benefit. As long as they're at a university, college, whatever, some kind of an educational institution on a full-time basis, and they're younger than 25, at 25 it cuts off basically, they will also receive a benefit for that as well. So there's no spousal benefit, but there is children's benefit. And remember that regardless of who's getting this money, it is a taxable income. Okay, so like I said, the benefit itself is taxable. There is, however, a death benefit. Okay, there is a death benefit, and that is up to $2,500. Now, I say up to because it all depends, of course, on how many years you've actually been contributing. So, in terms of contribution for this particular coverage, you have to have contributed 4 years out of the last 6 years in order to qualify for these benefits. So, as long as you've contributed over 4 years over the last 6 years, you'll get the benefit. If you contribute less than that, then of course you're going to get a lesser number and everything. But essentially, that is basically what the living benefit side of the Canada Pension Plan. Once again, I draw your attention to the fact that CPP is integrated with your long-term disability. So it's the same situation that we spoke about before with the EI, where there is the integration of EI with short-term disability. There's also integration with CPP and your long-term disability. So once again, CPP will take a second position. So if you have adequate coverage through your own private, your group insurance plan and everything else, then more likely is that you're not going to qualify for disability insurance. Okay, so there is integration with essentially group benefit plans that you have both on EI as well as CPP. And in a moment, we'll be talking about, of course, the last one of the government plans, which is WSIB, or commonly known as workers' compensation.